Hello, it's Simon, the CEO of Funded Trading Plus here, and I'm bringing you a very special episode of a fantastic trader who's made over six figures, and we're going to be delving into his story. Raj, congratulations on being over $100,000 of simulated profits. And we've got lots to talk about in this interview. People are going to want to know about your trading strategies, your story, how you've managed to do it. We're going to look at all of that in more detail. But how does it feel to be so successful?
It feels great, and I appreciate the opportunity to be here and talk about this.
So when you started trading, did you sort of think that you would achieve this sort of level of success?
No. I actually started trading because I round-tripped all the profits from the crypto bull run, previous bull run. And so I lost all those profits and more, and then figured, okay, let me see how I can get my funds back. And then that's how I started into trading.
You're going to trade in that way. So, I mean, when it went over $100,000, I mean, I guess for some people that's a psychological milestone. It's that six figures, isn't it? Did it have any sort of effect? How did it feel?
Yeah, I didn't even realize I hit 100K until I got the email from you guys. Because my long-term plans are just continue to try to scale the account to the max, and then eventually just start taking consistent profits. So I have a longer term view rather than just thinking about hitting 100K or 200K or whatever.
Yeah, and I think we're going to talk about that more in detail, but I think that is one of the sort of overarching things that stand out about your trading is the fact you do have that longer term view. You're not in that rush to get rich quick, if you like, and you've got that sort of longer term perspective, which is a message I try and drill into people, but it's one that does fall short on deaf ears quite often. So now you've reached over 100,000 with your simulated profits. What are your plans with it?
No current plans as to withdraw any profits. I will plan to just try and scale while leaving some buffer in the account for the daily drawdown. But yeah, just try and scale it up to the max that FTP offers.
You started off with 100,000 account, you passed that, you've made a profit, you scaled that to 200,000, then you scaled up to 400,000, and now you've got a balance of over 500,000. That's about accurate, is it?
Yeah, and the way I trade, I usually think I need around 7-8% buffer. So probably if I hit like 112 or something, then I'd probably look into scaling to the next.
So you're looking to take it to 800,000 and then beyond as well for that long-term plan to give you the required buying power.
Yep.
Okay. So tell us a bit more about how you got into funded trading and how you found it.
Yeah. So after I kind of round-tripped the profits from crypto last bull run, I looked into trading. So obviously one disadvantage of just using your own account, it's usually much smaller unless you're already rich.
Yeah.
So somehow I stumbled across the concept of prop firms. So I started with one, just did it like a demo. Now, at that time, I think there was a time limit on reaching a target. So I didn't hit the target, obviously. I'm way too slow. But that was sort of my first entry into knowing about prop firms. And then gradually I could see the potential. But eventually, I had to get my trading strategy correct before I could, dig deeper into any of these accounts.
Yeah, so that first prop firm you tried with had a time limit and you were able to do that. Yeah, I mean, not to bore you with this sort of past history of us, but yeah, back in 2021, we were one of the first people to remove time limits because it never made any sense to me. It's like if you don't rush people to trade. It's like if you've got your money invested with a fund manager, you don't want that person rushing, do you? You need to take the time. So you hit a time limit. That's good. No, I'm surprised that any firms still have time limits, but maybe they won't be around too long. You mentioned crypto, but you were just trading crypto normally, like through an exchange, like Coinbase or something like that.
Yeah, before I was actually using leverage. I think on one of those exchanges, maybe with a VPN. I don't know.
Yeah.
But yeah, that's what I was doing before. I wouldn't necessarily call it trading. I think in the last bull run, I was pretty much just buying and holding. So I had a coin that fundamentally was good. But of course, everybody tells you that, hold on to until it hits $1. It was 20 cents. And I held this from like 1 cent. So I round-tripped 20x, and then lost that and some more.
Oh, really? Okay, yeah. So you went for the small cap cryptos, it did 20x, and then it came back down with a crash as well. I think that's quite a lot of people's experience with cryptos.
Yeah, I think 4 years ago, a lot of people were in the same boat as me. They have same stories. They round-trip their gains, so this year they're trying to be smarter about it. So I think in a way they're also more cautious because they know they don't want to round-trip the gains. But without any kind of process, they may take profits too early, or they just might get out of the market.
So prior to crypto, did you have any trading experience?
No.
I think that's one of the unique things about crypto is just how broad it was in terms of its appeal for people who've never considered any sort of trading or investing in speculation. The old cliched saying goes is when your barber or hairdresser starts talking about crypto or start talking about something, it's time to get out. But yeah, I think that's what's unique. So you pulled in by crypto, and then you thought, well, now I've made a bit of money after learning from my mistakes in crypto, I'll try some funded trading as well. So what sort of timeline are we looking at then? When did you first start getting interested in crypto?
So not crypto in general, but I started getting into trading around 2-3 years ago. I came across this, various, obviously without any background knowledge or previous knowledge. I was just looking at various indicators. So I kind of cycled through, RSI, MACD, EMAs, all that, just trying to gain any information I could. And then from there, I basically was just strategy hopping because I didn't have any concepts previously to trading. And I was also not doing any risk management. So I may have had a good strategy or a decent one, but without any risk management, I just found myself just hopping onto the next one because nothing seemed to work, even though it was really risk management that was a problem.
It needs both of those. It needs the strategy and the psychology and the risk management. I think that's the common story for everyone. I think the analogy that is commonly given with trading, and there's many that can be given, is you open a trading account, it doesn't make you a trader, in the same way that me sitting in the cockpit of an airplane doesn't make me a pilot, does it? It's actually quite a complex set of skills, and people don't realize that it does take time and effort. People see it as a very sort of shortcut to riches, and they learn very quickly that it isn't. I think what's unique about you is you've obviously been through the pain and that learning, but then you've obviously made adjustments that we're going to talk about a little bit later that's managed to find success in a relatively short period of time, which is so impressive.
Yeah, you mentioned psychology, strategy, risk management, and actually I 100% agree with you. I think those three things are all connected.
So did you learn trading on your own then, or did you join any sort of groups or have any mentorship or courses or anything?
I didn't have any mentors, so pretty much just kind of on my own, but I did cycle through some of the indicators that are available, some free, some not free. Yeah.
Well, what is your background? What do you do other than trading?
I'm a software engineer.
You're a software engineer. Okay, that's broad. So I think you were telling me earlier your background is software engineering. So I guess you've got that sort of analytical engineering mind. Have you found that's benefited you in trading?
It has, because what I do is basically just backtest my strategy, and I find what works and what doesn't work. So I think it's kind of like reverse engineering a solution in a way. So I think that's where my background has helped me.
It has as well. I think that does help people who've got that sort of analytical engineering type side as well. But equally, some people can find a little bit to try and find perfection, if you like. I think sometimes that engineering mindset can be, if you put in a specific input, it'll lead to a specific output, and the market's a bit more random. Did you find that difficult to adapt to?
I did, but I quickly realized that my strategy has limitations, and it's okay not to be perfect. Because as long as I correct 70% of the time, 80% of the trade, if I can get the meat of the move, that will work in the long term. So I know my strategy has limitations, but I'm okay with that because for one thing, I don't know how to improve on it unless I figure out some way. But it has to be an actionable way, something that's concrete in a way for me to just do it generally across all the instruments that I trade rather than any one specific, outcome.
So you've obviously lived and breathed these crypto bull runs. I think was it 2017? Was that the first major one I seem to remember?
I think it was, yeah.
And then probably one after, and then this one's gone absolutely crazy post sort of US election with Trump getting back in and giving sort of pro-crypto sort of indications, really. How does this one differ to the previous one? Because obviously we've set the really high records.
So in the previous one, without any knowledge of indicators or any technical analysis, I was just relying on crypto Twitter. So everybody said it's going to hit 100K, which it didn't. So just left holding the bag. But this time it's different because I have my own strategy that I use. So whether crypto has already topped right now or not, I'll still trade with my strategy, and it's whatever the market gives me is what I'll take.
The question I've got to ask is, how did you stumble across us then?
You're actually one of the first initial firms I came across when doing the prop firms. In fact, if I'm not mistaken, the first account I had with you guys, I breached.
Yeah.
It might have been daily drawdown, max drawdown, but I think at that time I didn't have any concept of risk management.
Yeah.
So that was probably the reason why I breached it. And then I guess I eventually came back a little smarter and kind of worked out.
Yeah, we're glad you did. Okay, so let's talk about the things that people are really going to want to hear. What markets do you trade then?
I trade 6 instruments right now. So the 2 major cryptos, Bitcoin, Ether, the 3 major indices, and then gold.
And then gold. What attracted you to those?
So all these 6 are sort of assets that can just trend up. The ones kind of that you can hold on forever. So they have they usually have good trends that can last for months and years. So it kind of fit into my trend strategy.
Yeah, well, that makes sense because cryptos obviously has the sort of meme-based bull runs, doesn't it? Indices generally trend upwards anyway. If you look at history, you can go back to the Dow over 100 years, and because that makes sense because companies are trying to make money, they're trying to make profit, so indices go up, and then gold is often sort of inversely correlated to the indices as well. So that's a good trender. So that leads us nicely on to trading strategies then. I'm presuming you're a trend trading.
Yes, 100% trend trading. Pretty much from the early on, that was the thing that seemed the most simple thing to me. So obviously I looked into candle patterns and, big blocks, little blocks, but it never really caught my interest. Trend trading seemed very simple to me. So that's kind of what attracted me to trading.
Have you ever tried range trading before then?
I have not tried range trading. Not smart enough for that.
Well, I think the saying is the trend is your friend. I think people try and never end up seeing people who, when the market's trending, and trying to short it and trying to pick the top and bottom. So I think you've probably been more sensible with trending markets because markets generally, in periods, do trend more than they sort of range, if you like. Is it just sort of uptrends you've really capitalised on then, or have you taken advantage of downtrends at any point as well?
I think this year has been uptrends just because it happened to be an uptrend year. But my strategy can be used for downtrends as well. So maybe a year from now, 2 years from now, that I might be just looking to just short everything. So it's whatever the market gives me.
That makes sense. Yeah, I mean, I think the thing with downtrends is they can come suddenly and they tend to fall a lot quicker than they go up as well. So maybe some slight tweaks to the strategy, but it's good that you've got that flexibility because and it's when some people will be in denial for quite a long time, markets starts going down. It's like, oh, I'll catch it. And that's the road to disaster we've seen many times. So how do you decide to enter and exit a trade?
Purely by indicators. So I've backtested my strategy and I'm fairly confident in what I've backtested. So at the time of execution, it's simply just executing the trade, not thinking about it and just trusting that whatever research I'd done previously, any backtesting, that works. And it works most of the time. So if it hits my triggers, I just enter the trade.
So it's quite a mechanical strategy. It's a case of when the stars align, X, Y, and Z say this, then you'll enter a trade based on the back testing that you've done.
Yeah, absolutely. If I told you my trading strategy, we'd have exactly the same trades, same outcomes.
Right, okay. I'm not going to ask you to tell your trading, to give you a secret sauce away. So sorry to anyone who was expecting that. But if you could give us sort of a general indication, if you like, maybe one indicator that you'll use that has to align. An RSI, did you say you mentioned RSI earlier?
I used to use RSI before, but not anymore. But I use a couple of indicators that help with trend analysis, and then just a little bit of TA, just based on my understanding of the markets.
What time frames do you look at?
Just daily. So I will just either enter a trade, exit a trade, or re-enter a trade at the close of the day.
Do you have specific times that you look to trade as well, or is it just whenever the indicators align?
It's whenever the indicators align.
Do you have any alerts or alarms set?
I do not have any alerts because I will just look at the close of market each day anyway, and that will determine whether I do any action or not.
So how often do you need to sort of monitor or manage your trades? Is it a case of set and forget with an order, or do you enter and then you can just relax and go away from it and come back to it?
Yeah, I just have to look at the market just once a day at the end of the day. So I could be out playing golf and I don't have to monitor markets at all. If I get stopped, I get stopped, and I would re-enter at the close.
Okay. I mean, that sounds like a pretty good work-life balance of that. I think trading's quite unique as sometimes doing less is more, whereas most jobs that we have, doing more is more. Software engineering, I guess, the more you're writing code, the more you're testing, the more you're doing things like that, the more productive you are. Whereas I think a lot of people struggle with trading is the fact that being hands-off and doing less, either not trading because the conditions aren't right, or just leaving things alone. And I think that's quite a difficult skill to get used to. Did it take any effort on your part to get used to that?
I think right from the get-go, I wanted to trade less. So I wanted to have some kind of balance. Actually, when I started, I looked at the 4-hour time frame, and I thought that was a high-level time frame. You tell me 4 hour right now, and I think that's very short.
Yeah.
So I think most people would be better off trading a longer time frame because especially with trend trading, trend is your friend, and trends on a higher time frame just tend to be stronger.
Yeah, that's right. I think it's less stressful as well to trade a higher time frame, and you also have a longer amount of time to make a decision because we don't always feel great. We'll talk about psychology a little bit later, but you might be stressed or not happy with a trade, or a trade might be one of those trades that you enter and it goes straight against you, and you might not want to take the loss. Well, if you've got a few hours to get yourself in the mindset to take the loss, you go out and play golf or or anything like that, then it's a lot easier. Whereas the people who are trading on 5-minute time frames and are higher leveraged and the move's going against them, if you're not in that great mood to make the right decisions, it can really work against you. So I completely agree. Or certainly people, I think, should start off in the longer term time frames and then maybe work the way in. Whereas, people want to be day traders. We've got people who take hundreds and thousands of trades, and it must be super stressful to do that.
Yeah, absolutely. I think it's so easy to click a button to just buy and sell. People just want to do that. And I think when you do that just for the sake of doing it, I think you're just gambling.
Yeah, people are punting and do take far too many trades, and it does cause some issues, which is often the route to failure. So when you started being successful in these sort of 5-6 markets that you trade, did you start off with one and then add more in the future, or was it just a case of straight away you knew like to crypto, a couple of indices, and then gold?
Yeah, I actually started with Ether because I thought that was a good balance. It moves a little faster than Bitcoin. It's volatile, but there is some sort of order to it compared to the smaller cap cryptos. So that I initially started with Ether, developed my strategy around that, and then just try to expand it to the other instruments.
So how do you deal and adapt with the changing volatility? Because crypto went from not being particularly volatile, and then we've got a very pro-crypto president, and then it just went a bit parabolic and crazy.
So no real thoughts to it. Again, usually my strategy is just take what the market gives me. So obviously people are very bullish on crypto right now, but it could be a case of also just the market getting ahead of itself. But to me, it doesn't really matter. If it continues to go up, great, I'll be in the trade. If not, I won't be.
So if the market hits a bit of a sideways period, how are you going to sort of adapt to that?
So that's something I've improved over these last 6 months. I've handled chop much better now because that is one of the things that is the hardest bit to trend trading. So in recent time, I have adapted my strategies a little bit to handle chop better and not to get chopped out every so often. So that has helped me.
So if there's a sustained sideways period, which there often is after some vicious trending, you're just quite happy to sit on your hands and maybe not take trades for quite some time?
Yeah, I might take one or two, maybe get chopped out on both of them or so, but eventually there'll be a point where I just won't be in any trade.
Yeah, and I think that long-term perspective is really good because as you spoke about earlier, you said that people just can't stop pressing buttons. So I think if you've got that mental discipline just to sit on the sidelines when you need to and wait for the next trending markets, I think that's something that's going to serve you well. And don't underestimate how difficult that is for people. Even for me, when I traded for many, many years as well, particularly when you get into a winning rhythm and you're making superb profit and you're motivated and you want to keep going and making more profit. And then if the market's not giving you the conditions, it's very, very difficult to switch mindsets like that. So what does your trading day look like?
Very boring. I actually trade on the phone. I can trade completely 100% on the phone. I do a little bit of trading maybe on the laptop just because it's a little quicker to just monitor the positions and just adjust the positions. But otherwise, I just need my phone.
Is that because the sort of software and the analysis is that clear on a modern smartphone that it's just as good as a desktop?
Yeah, it's clear and I really don't do much analysis. I mean, with the couple of indicators I have, and the fact that I just trade once a day makes it pretty simple. I don't have to do any fancy trend lines or order blocks or things like that.
Is all your analysis contained in MatchTrader Mobile then?
I actually use TradingView because that's where I can load the indicators and just do a little bit of TA. So that I use that. That's my most used app.
Is TradingView on Match or is it separate?
It may be. I know some firms have added it, but yeah. I mean, I have it as a separate app.
You guys,
I don't.
Okay,
I don't even care. I literally just log into it, make the trades.
Well, TradingView is super popular and it's one of our most demanded bits of software, which is why we added it to a couple of platforms. It's really interesting to see that it's all contained within a mobile because I've usually fought against the stereotypes of trading on the beach with a mobile and things like that because generally it's very difficult. But I think with a longer term time frame, it shows that is possible as opposed to sort of 1 minute scalping on a mobile. So that's really interesting. A few years ago, I could never imagine not trading with like a multiple monitor setup and I guess without again playing into that sort of cliche that I don't like, you are able to travel and trade. You've got your system sorted, you've got your risk management, and you can do it all from your mobile, which a few years ago I think would have been pretty unheard of.
Yeah, absolutely. It seems like you need 2 or 3 screens to trade, but I think it's always a case of less is more. So obviously most people prefer a big screen and that makes sense, but it just depends on your strategy, I think.
Yeah, I think what one of the key things we're taking away from here is if you've sort of found out what works for your specific circumstances, what works for you may not work for someone else and vice versa as well, which I think is really important in trading is to find out what works for your circumstances. So essentially it just fits around your life then.
Yeah, I think that's 100% true. Yep.
You're still working full-time software, I take it?
Yes.
Yeah, okay. Do you think having a full-time job sort of helps you as well? Because we're talking about not being distracted, not over-trading, not being drawn to the charts. It's the fact that you've got your system, you put trades in place, and then I guess you can just sort of get on with your normal day job.
I think what helps is I have a remote job, so that gives me flexibility to look at the markets only when I need to, without the added pressure of just commuting back and forth work.
Yeah, I love remote working as well. I don't think I'd ever change working from home now. It's just so much more time efficient, isn't it? And it gives you time to, be able to trade as well as your job and things like that.
If I had to get into work, I'd quit my job. I'll look for another one.
Is there anything you can tell us a bit more about your strategy and decision making, maybe your indicators and in a sort of general sense?
Yeah, everything is geared towards just trend analysis. So the indicators I use help with that. In a way, they're basically just fancier EMAs or kind of versions like that. But I will say that just like any other indicators, they are lagging indicators. So you can't just rely on them 100%. You do need to put in a bit of work and just understand how they operate and what the positive and negatives are for that.
Are they looking at momentum or anything like that?
Yeah, they look at momentum. So they there's a visual way that indicates that a market is in an uptrend or downtrend. So it really makes it easy for trend analysis.
Are you, so to enter a trade then, what are you looking for? Are you looking for a range to break? Are you looking for a pullback or?
So I usually buy high, sell higher. That is really my goal. When my indicators align and my TA aligns with it, then I pull the trigger.
Okay. And we're going to look at some of your specific trades later and maybe be able to explain a little bit more there of why we got into a trade and things like that to give some insight. So if you could distill it down into top 3 tips for aspiring traders to reach a milestone like yours, what would they be?
It's actually the 3 things you touched on earlier: strategy, psychology, risk management. I think if you have all 3 down, then you're kind of on your way to being decently profitable, at least, if not very profitable.
Yeah, I mean, it's the same. It's just no reinventing the wheel with trading, is there? It's just the same things, the same difficult challenges, having that profitable strategy, having that psychology and able to execute the strategy, and having that risk management to make sure that you're not going to take yourself out of the game easily.
Yeah, and there's so many strategies out there. Like you said, you don't have to reinvent the wheel. I think it's more important to have psychology and risk management and just a decent strategy, and you're kind of on your way to just getting consistent payouts. They might not be big payouts, but there will be a payout.
I think you raised that important point as well, because strategy is the sexy one, isn't it? People want to spend 90% of the time on the strategy and then give lip service to the other two, where really it needs to be sort of 90% of your time needs to be on that psychology and risk management. And the strategy is the relatively easy part. There's lots of strategies out there, like you say, that give an edge that will allow you to make profits in the markets, but it's executing that strategy, which is such a challenge.
Yeah, absolutely. If I had to do this again, I'd probably start with just a demo account, figure out my strategy, just have some rules in place as far as drawdown, just kind of replicating what a prop firm would have, and see if I can be profitable after 6 months, 12 months. I think the mistake a lot of traders make, it's just easy to get an account, start trading a live account, but then you just end up blowing your account and just reading it all over again.
It's unusual for people to have your level of perspective and patience. Like you say, people are very keen because it's so obvious, isn't it? It's like, well, I can do this, and by this time I'll be making this much money, and that never really works out to be the case. People need a little bit more patience.
Well, in the beginning, I didn't have patience either, so I can speak from all of my failures.
Well, that's it. I mean, I think you have to go through those negative experiences in order to be able to define them. It's a case of I can tell you that if you chase a loss, it's going to feel really terrible, but until you actually do it. The difference between you and the other successful traders is you learn from those mistakes. You don't keep doing repetition. So it's good to have those experiences, provided they're not catastrophic and you lose your house. But it's when you repeat those mistakes that the winners don't repeat them. The winners learn from them, which is what you've done. How important is journaling and reviewing your trades to you?
I don't journal per se, but I'm always reviewing my trades just by looking at the charts anyway. So nothing formal, but I am putting the work behind the scenes.
So we're going to look at a really good losing example later, which sounds quite perverse, isn't it? You think we'll just look at winners, but there's a fantastic losing example that we're going to look at later where you just got ticked out and then the market went in your favor, and that could have triggered a lot of negative things. So how do you handle losses, particularly frustrating ones like the one we're going to talk about later?
I think after you have a system and you're confident that your system works most of the time, that makes it easy, because then just losses are just part of the business, because you could be unlucky today, but tomorrow you could be just lucky. I think the key is to just be level-headed and just take what the market gives you.
I love that phrase, it's a part of business, because people need to view trading as a business. And again, not to bore on with too many analogies today, but some people say taking losses is like, it's just a cost of doing business. It's like a shopkeeper doesn't get stressed out that you have to buy stock to sell, do they? Or, BMW don't get annoyed they have to spend money on building the cars in order to sell them as well. It's just a cost of doing business, and framing it in that way helps a lot. So like any trader, you'll have periods of drawdown, you'll have periods of we'll look at your equity curve where periods go sideways and things like that. How do you stay motivated and disciplined when the markets are a bit more challenging?
I think you have to realize that there will be periods like this, but if you have done the work and you have got a good system that you have tested, then you know that it can easily turn around as well. So it's not uncommon for me to, when I start a new account, I could be down 2, 3, 4%, but eventually it'll turn around if the strategy is fine.
You got that confidence in your system?
Yeah, absolutely. Yeah, and that confidence just comes from just backtesting a lot.
What's the most significant trading lesson you've learned so far on your journey?
Yeah, I think it's actually risk management. When I first heard about risk management, I actually ignored it completely because I thought maybe if you're talking about having smaller lot sizes, but I know what I'm doing. I don't need to have smaller lot sizes. But now I understand it's actually the opposite, because it's ironically the one way that lets you keep your profits by having risk management. So I would say it's that.
Yeah. Do you risk the same amount each trade?
I do initially, 1%. And then in my case, what I do is if I do re-enter a trade, I will just re-enter with that same position size, even though the percentage might be a little bit different.
So you will add to a winner?
I do not. I don't. That's
no.
I haven't figured that part out. So
that's the problem.
So it's whatever I started off with in that uptrend or downtrend. That's kind of what I'll carry on.
So we know your crypto background. You dabbled with some real crypto, and you caught a bull run that allowed you to pay for your funded accounts. So we know why you're trading crypto. How do you find it different to any sort of other financial markets?
Not too dissimilar. If you look at the indices or even gold, they even have nice uptrends. So maybe the percentages are not the same, but when you factor in risk management and the lot sizes, it's literally almost the same thing.
It's almost like you're taking away the labels from the market. You're just looking at position sizing and then trends, and then just sort of managing your risk accordingly.
Yeah, absolutely. Because if you look across the market, I mean, there's so many things that are uptrending, but eventually, obviously, you can't trade all of them just because of drawdown concerns.
You mentioned sort of Twitter crypto earlier, didn't you? Do you follow any news or fundamentals or anything like that, or is it just purely sort of technical analysis for you when you're making your trading decisions?
I don't do it now. I just do it for the entertainment.
You just look for the entertainment. But do you follow any sort of macro news? I don't know, you're looking at FOMC or non-farm payrolls or anything like that, or do they not sort of go into your trading decisions?
I don't make any decisions based on news. I think the account I have with FTP, I usually end up placing my trade much before the news. And if I get stopped out or not during the news, it's irrelevant to me.
Well, because you're a longer term trader as well, it can sort of build in that news. I mean, we see people who have they'll be on gold and they'll have like a 2-point stop on gold over NFP or something. You might just get stopped out straight away. But I guess if you'll know daily time frames, then you can sort of, whether the news is volatile or not, you can sort of build into it. It's not going to threaten you as much.
Yeah, just because I trade on the daily, I have naturally larger stops.
Going to get quite deep now with sort of mindset and reflection. So if you could go back in time and speak to your beginner self, what would you tell him?
Start with the demo account, figure out your strategy, understand your mindset, have solid risk management, prove that you can be profitable over 6 months, 12 months, and then go and open up all the accounts you want.
What was your proudest moment in your trading journey so far?
I think when I connected all the pieces together and I saw that it worked, which kind of happened earlier this year. Suddenly, I'd never passed account before, and then suddenly I'm seeing that I'm now passing the accounts, and it's not just luck. I'm passing the evaluation. I now have a funded account. I am profitable, so that kind of gives you the belief that you can keep this going.
See, I like that answer, because I bet if I did a poll, everyone would say it's when you made that 6 figures, but it's not. It's when the system came together and you knew it would give you the opportunity to make those consistent returns. So that's a much better answer.
Yeah, if you can prove that you can be profitable over a certain period of time, then you most likely can be profitable over a longer period of time. So I think the system is important.
Agreed. Thank you for watching this episode of We Are Funded Trading Plus and this excellent interview of Raj. Please stay tuned for further episodes where we're going to be asking quick fire questions and also doing analysis of his trades.